just wanted to, I don't know, just felt like I had different ideas going on through my head and wanted to make a quick video. Um, just talking about combining all the different time frames from the monthly, the weekly, the higher, bigger picture trend, all the way down to the minute chart. Because, as day traders, we are literally trading just the minute candles. I mean, it's just so small of a time frame compared to the bigger picture of what we also look at. We look at all these bigger picture things. Well, how does it connect with the small time frame? And I think that's what we try to get good at, is going down all the time frames, coming up with trends or setups for each of those time frames, and then coming up with a combination to give us the best, highest probability of success for the direction that we want to trade it in on that day. So like, here's the SPY from March 2020, when COVID first, when the shutdown happened, right? And I just sort of liked what it did through these couple weeks here. It just happened to be right when it eventually broke all-time high again, but I just feel like I can easily explain sort of what was going on the daily, by looking at the levels and ranges that it creates. So price gets up here near all-time high again after selling off for a month, and then we had that big V, right? And so we're nearing all-time high up here at 340, and then it gaps up, and so let me make this a little bigger. Yeah, so it gaps up on this day up here, right? And so you could say, well, we're bullish, right? We want to go long, because you had multiple days here where it's sort of compressing. You had a clear level here, whole dollar, gaps up. It was a couple green candles though, so we'll probably do some kind of retest, and that's what happened. It gaps up, and then you have a really big retest right down to the support pretty much. You could go long there, and then it even ends up higher than it opened, and you have a nice hammer, which is bullish, right? So that whole thing just kind of screams bullish, that whole setup. And then from there you had a week or two of just up moves, and then you have some profit taking, right? Because you did recently just hit all-time high after COVID, the COVID lows, and then you get these big two days of profit taking, which in 2 days breaks all the way down through the all-time high. So, and you can see here that there's more volume, right? We usually do get more volume on the down moves, generally speaking, with the SPY and those ETFs, I feel like. So, whereas the up moves are just kind of average, just taking its time going up. So we do want to, when price is going down, we do want to think about, okay, well, remember 340 was a good level, but volume trumps all levels. So on that second day, volume rips down through that and then actually holds above, and then we have an even a big gap down, and then so basically this sort of recent all-time high, which worked perfect on this day, pretty much stops working here every day. And that's all right, but you just have to sort of notice that. You just want to, notate that. Levels work, and then sometimes they don't, and then sometimes they end up working again later. So that level of 340 works great there, and then during the sell-off, these ranges were so big and with a lot of volume that it ended up creating its own range. So we created a nice daily range here, and you can pick that out because it was the low of this day, it was the close of this day, high, high, high. Just the more days that hit it, the more that this becomes a really good level. And it becomes it stays a good level even days later here. And then on the other end, down here, you end up creating a good level here. And so for right now, we're not thinking about this past level. We're thinking, okay, we're taking profit, Now we're even going underneath this level. So we're in a bullish trend now still. However, temporarily we're in a down move. So big picture, months from now we should be thinking long, but the next few days, maybe the next week or two, we're thinking short until otherwise, right? Until maybe price gets above here, and then we can start to get long again. So we find new levels are then created, and then once they're created and they get stronger, once we can get back above them, that's considered a new breakout or a new, shorts become longs, and a change in character happens. So we make this nice daily range, and we do have a breakdown here, but it's quickly bought right back up. So that's still a level because this level's touched more times here than it is just here. And then this holds again, and then on this day we have a breakdown, right? Price breaks down through this yellow level, and then it goes even further and breaks down through that. So we're in basically breakdown mode again. So we sold off here, made a range, broke down. We did come back up a little bit, but technically you could have taken it short here, or you could have taken it short here in the intraday, right? We would have wanted to short that. Even though maybe on the daily range on this day, we might have been thinking long, right? Because here we have good support. We're generally in a uptrend, right? Yeah, we sold down temporarily, but we're at the bottom of the range, so we want to say, well, this will hold, so we're more long, right? Well, maybe we would have waited for this price to get down right here. We go long. Probably would have been some kind of reversal because price was going down. So on the 1 minute basis, we were trying to, there would have been a data level right there. We would have been trying to go long. It wouldn't have worked. And then maybe we would have turned around and gone short. Or then here tried to go long or go short, depending on what you wanted to do, right? You were playing to stay in the range, or you were playing the breakdown. Either way, they both worked. I mean, yeah, you would have gotten stopped out on the reverse, but the level is correct. So, and that's all really we can ask for, is finding the correct levels. If you can find the correct levels, you either go long or short, and you're either going to be right or wrong, but you cut your losses, and then when you get that level again, you get it correct, then you hold your gains, right? So that's how we make the money. So here we break down, then we even gap down. So this confirms that this was a legit breakdown, because then we gap down. And now we have another level, or another range created here. And you can see here that this yellow level is sort of the next best level, because it's confirmed multiple days here by not being able to get above. And then we have another range here. So we've had a good daily range here, a breakdown moment here, gap down, and now a new daily range. So again, bigger picture, you'd zoom out and you'd say we're in a big uptrend. Short term, we're in a pullback, right? So we're more mixed on whether we're long or short. We just have to. You see how the more days that go by, the more these levels become stronger, and you have better opportunities and higher probabilities. So on this day, price goes up, and say it would have came all the way up here on this day. Well, we might have shorted it, right? I mean, it came all the way from down here, even though we're bullish trend on a higher time frame. And yeah, sure, eventually price is going to get higher, but we don't know on this day. And on our, day trading analysis and how we use ATR and this and that, well, we'd say this is overextended on a daily time frame. So maybe we try to reverse it right there and get some type of short-term reverse. Maybe overall we're thinking this is eventually going to compress and break this level. But on this day in time, price comes all the way up here, we're going to short it maybe to VWAP on that day. So that's sort of combining all those times. So then, but price didn't do that, didn't come up that high. So maybe we were long down here and we partialed all the way up and we got out. So then the next day though, price gaps up. Okay, so that's a change in character here, because we had this nice range, and instead of staying in the range and maybe even continuing to break down, we now gap above, right? So what happened over here when we had that sort of daily range near all-time high, and we gapped above. We did a pullback, and then we were bullish. So here, higher time frame is bullish. We have a nice range. We gap above. So now we're closer to being more long bias again, right? We had this nice level here that might come into play in a few days from now, but for right now, we're going to be seeing if we could get long above this level. We also have this level a little bit too, but most recently this is the best level. Didn't give you much opportunity here. It was a pretty tight move, and that's probably because we had such a big move from here to here, and then it gapped up. So we were pretty extended. So that makes sense. We had an inside day, had another inside day, which is really good. So now you got a little mini compression, which within the bigger time frame, which is, hey, this is a good support. We're a little more bullish now that we're above this level. How can we get long? Well, we had a tight range here. We couldn't really get long. Okay, this is good though, because this is building pressure to maybe give us a way to get long here. So then price opens inside again. As soon as price comes up to here on this day, maybe we take the breakout. Boom, we go long. And we would have gotten a decent move all the way up to here. Maybe we would have thought, well, maybe we can get all the way up to here. But it didn't work, but that's all right. We still take some partials, and then price closes back inside the range, so we're not really sure what's going on. Gaps up, maybe we try to get long again. Price comes all the way down, bounces, we could get long there. And so you could just, yeah, so then price gaps down. Okay, oh wow, are we bearish again? Well, not necessarily, because we're still above this level. So we get long somewhere in here, it works out. And so now we're starting to create a new daily range here. Sort of this compression, the high here and the low here that works with this level. And then we have a gap up here. So you can just see how these start to get a bit more tough. But I think here these ranges are really clean, and the longer that you're inside them, the better that they get, and the more you kind of can work with it. Like going short here, not getting a major move, but getting short, and then even getting a continuation down to the bottom of support here. Yeah. And so going forward just a little bit longer, it starts to get a little bit tricky, but these levels can still play out. If I push it forward further here, you can see here how price got up above this, so we would have been bullish again. But because it's a SPY, sometimes it just moves really small and just does these little trickle gap ups, and they're kind of hard to trade, right? But for the most part, it does respect the levels, because then it pulls back, holds this level pretty decently, and then eventually gaps down again, and then this level holds pretty decently. You can see here how price isn't really stuck in here, right? This was a gap. So you can see here how price is more underneath down here, gaps above. And then as you get further away, this level, this 340, which was all-time high, was a really big level. It sort of wasn't working during this, but then it sometimes feels like when you get later in the months, you can sort of go back to a really good level like that. And so when you push this forward, and you say, okay, we're in here, we're gapping up, and then here, and then on this day we're gapping up, and so we sort of look at where these levels are, and we're like, hey, this is actually really close to that all-time high 340 level. So then you put that level there, and then sure enough, on that day, price does pull back, retest, hits it within 50 cents, it looks like. Actually, I'm not sure, but hits it pretty well, and then you would have had a really good move all the way up. And then from there, it went long. And so that, I don't know, that just seems to kind of make sense to me. You know, overall, we were still bullish, especially once we hit all-time high, we're bullish. But this is normal. This is a pullback. This is profit taking. And then, hey, we're going even lower. And the lower you go, the more volume comes in generally. And then you have bigger ranges, bigger ATR moves. And then you let these daily levels kind of line up and combine to make really good levels, and then you trade off of those ranges until otherwise, and you start to draw the bigger picture patterns, like, we had a sell down, but then we had a shoulder here, and we had a head, and then we get back here and make another shoulder, and then we go long, right? So that's a inverse head and shoulders. That's why those patterns are popular, because they work out well. And then here comes down. Well, as soon as price gets down here, what are we saying? Well, we're saying this was a double top. So this was the inverse head and shoulders, which worked well. And then once price gets under here, now we're saying this is a double top. And what do double tops do? Well, they can create some pretty good down moves, and that's what happens. It goes all the way down, basically tests the low of here, and then starts going up. And then you can say, well, now we have a double bottom, right? and this double bottom works really well because higher time frame, we're long bias, right? And so we're double bottom temporarily. Well, we're especially double bottom once we get back above this yellow here, because now it's a change. We had a daily range, we get back above there. Now there's new buyers, we're above this good level, and then this double bottom might be working out. We gap up, we're above the really good psychological all-time high level, and then we keep going. And then the longer it goes up, the more this double bottom was effective. And yeah, and then here we're getting close to all-time high again, and then we have a huge gap up all the way up here, right? According to the ATR, looking at all these small moves, this is a pretty big gap. So what do you get? You get a massive profit taking. So that's a pretty good short, just sort of a reversion to the mean, back to value, sort of overextended, and then you get a lot of volume on that day too. And you can see here that later, eventually once price gets above, it eventually gaps above and holds that level, and then you get a short-term long, a retest, long, a fake breakdown, and then a long. And so we just have all of our patterns and names that we use to trade these things to give us higher probabilities of success. And when you look at the really big higher time frame, you can notice that hey, every time we pull back, hold on here. Every time we pull back, we don't really get much further than this moving average, this 100-day moving average. We almost never hit the 200-day, besides when we had that really big, COVID news. But other than that, every pullback is generally to the 100-day moving average, maybe a little bit further, and that's about it. This is a 10% pullback, 7%. I would say it's anywhere from 5 to 7% is about the furthest it goes. And then you get a nice move back up. So you sort of combine that rule of thumb with your other patterns. Like, okay, well, we're getting a pullback here. What if I want to go long for a swing or for an investment or whatever? Generally, rule of thumb is saying that price doesn't get much further below a 100-day moving average. So here it hits the 100-day moving average. Here it hits it. On top of that, we don't really get further than about 7% pullback. Here we're at 5, almost 6% pullback here. So all those things converging, we're pretty close to the bottom here. So we could start maybe looking for longs, and then you combine that with, well, let's look for some patterns on the daily ranges that we might like. And here you can notice we start to create those daily ranges like I was talking about with good volume. You can trade around. You get a gap up. Maybe you're thinking, okay, we're long here, so I'm going to start buying some more SPY for the long term, because we hit the percentage rule of thumb. We hit the 100-day moving average twice now. Now we're above it. We're above all these things. Plus we made a nice daily range here, and sort of a head and shoulders. But then, oh look, it didn't quite work all the way. You get back under here, so now we're bearish. We're bearish as we're inside this level, but then we gap back above, and then now we're long, and then that's where it played out. So you might not get the perfect entry. You might have to wait till somewhere up here to really start getting long on maybe a higher time frame idea, but that's all right, because we don't always get it perfect.